Hello everyone, welcome to Property Ponderings. My name's Craig Nicol, buyer's agent at Nicol Buyer Advisory in Melbourne, Australia, bringing to you over 15 years of property experience as an agency owner, property investor, renovator, town planner, salesperson, auctioneer and buyer's agent. I want you to make better property buying and renovating decisions to build the future that you are chasing. Today we're talking about why you shouldn't rely too heavily on property market predictions from experts or from anyone else of that kind. If you've been in the property market for a while, you've probably heard experts confidently making forecasts about where the market is heading, but more often than not, these predictions miss the mark. In fact, some of the biggest calls from respected economists and analysts over the past few decades have been proven spectacularly wrong. So today, I'm going to break down why these predictions can be unreliable and how you can make better property decisions without relying on the guesswork. Let's start by looking at some examples of just how off the mark property predictions have been within Australia. One of the most recent cases occurred during the COVID-19 pandemic. Many top economists and analysts, including those from major banks and research institutions, forecasted a drop of 30% in property prices due to the economic downturn and border closures. However, what actually happened was the opposite. Property prices soared by more than 20% in many markets across Australia as low interest rates and government stimulus packages drove demand higher than ever. This led to a severe underestimation of how resilient the property market could be under extreme circumstances. Another famous example of flawed forecasting occurred in 2019. Around this time, the property market was in a slump and many leading economists predicted a prolonged downturn, warning that property values in Sydney and Melbourne could continue falling for years. Yet the market turned around sharply within months, leading to one of the strongest price surges in recent history. So why do these experts often get it wrong? According to Stuart Weems, a financial strategist and author, one of the biggest issues is over-reliance on short-term factors. Economists often base their predictions on current trends like interest rates, employment figures, or supply and demand imbalances. But the property market is influenced by a complex interplay of factors, many of which are hard to quantify or foresee, such as buyer psychology, government interventions, and global economic changes. Weems and Michael Yardney, a prominent property strategist, point out that the supply and demand ratio is a critical element often overlooked. For example, in periods of tight supply as we saw during the COVID-19 pandemic, prices can increase dramatically even if the broader economy is struggling. Cognitive biases play a huge role in skewing predictions. Economists, like anyone else, can fall prey to biases such as recency bias, the tendency to base predictions on the most recent trends, or confirmation bias, where analysts interpret data in a way that supports their existing beliefs. Nobel laureate Daniel Kahneman, in his book Thinking Fast and Slow, which I've quoted and used as an example before, explains that these biases could cloud judgment, leading even experts to make flawed forecasts. Property markets don't move in a linear fashion, and sudden shifts can be driven by factors that models failure to capture, such as sudden changes in buyer sentiment or unexpected policy changes. Following property predictions too closely can be dangerous. Many investors make decisions based on short-term forecasts only to find that the market doesn't behave as expected. For example, those who held off buying during 2020 in anticipation of a market crash ended up missing out on one of the most significant price surges in decades. And we've seen that price growth across Australia has continued in general from that point on, and there hasn't been the crash that everyone expected. Warren Buffett's advice is particularly relevant here. Forecasts may tell you a great deal about the forecaster, they tell you nothing about the future. Instead of relying on forecasts, Buffett recommends focusing on long-term fundamentals and buying quality assets that you're comfortable holding regardless of short-term market movements. So if property predictions are unreliable, how should you approach the market? Here are a few tips. Focus on long-term fundamentals. Look at the factors that consistently drive demand over time, such as location, proximity to infrastructure, and demographic trends. Instead of chasing short-term gains, buyers should look for areas with a strong track record of long-term capital growth. Number 2, understand your personal strategy. Instead of basing your decisions on what the market is doing, Build your own strategy around your financial goals, risk tolerance, and long-term plans. And this is something that I do with my clients, and it takes a lot of time to get right to ensure that you can plan a strategy that will work for your unique circumstances as well as possible. Number 3, be wary of herd mentality. Just because everyone is rushing into or out of a market doesn't mean it's the right move for you. History has shown that the best opportunities often come when others are fearful. Number 4, use data to inform, not dictate. While data can provide useful insights, it's only one piece of the puzzle. Look beyond the numbers and consider qualitative factors like future infrastructure developments, employment growth, and lifestyle appeal. Okay, that ends another episode of Property Ponderings. I hope that gives you a few small tips to make better property buying decisions. Remember, property predictions can be useful for understanding broad trends, but they shouldn't be the dictating factor in your investment strategy. If you want to discuss anything further from this podcast, or if you're wanting to get tailored buying and renovating advice, please feel free to contact me on 0400 122 081 or email me at craig@nickelbuyeradvisory.com.au. Chat again soon. The information provided in this podcast is for general information purposes only and does not constitute financial, legal or professional advice. While we aim to provide accurate and up-to-date information, every property transaction and investment is unique and should seek the advice of a qualified professional before making any financial decisions. The opinions expressed in this podcast are our own and are not a substitute for tailored advice from a financial advisor or a real estate professional. We encourage you to consult with a qualified expert who can address your specific needs and circumstances.